So this is the second part of our swing trading series. In this particular part, we'll be looking at support and resistance while swing trading. In the first part, we just looked at some basics of swing trading, and in this particular part, I'll be showing you reliable methods on how to choose support and resistance level that we will be applying in various swing trading strategies ahead. So let's get started. In this channel, we talk about trading, investing, and market analysis to help you become a better investor and trader. So if you're new here, consider subscribing. So the learning objectives for this series is as follows. So in this part, I'll be taking you through some basics of support and resistance, then I'll be showing how support and resistance is applied based on technical analysis concepts. I'll also be highlighting the importance of Fibonacci retracement in identifying high probability support and resistance level. And then I'll be moving to sort of a unique concept for support and resistance that I use, though this concept is based on market profile volume nodes, so I'll be showing you what a basic volume node is, how do you categorize between a high volume node and a low volume node, and then I'll help you identify support and resistance level based on volume nodes. So in case, I've actually split this support and resistance part into two phases. In the first part, I'm going to show you the traditional method of using support and resistance, and in the second part, we'll be doing it through volume profile. So, in case any one of you does not have access to volume profile charts, you can use the traditional method as well that I'm going to show you in combination with Fibonacci retracement. Both of these methods work very well, and you can choose based on your own preference. So I'll just show you what a basic support level means in technical analysis. So here we have a chart. We've had some retracement of about 5 to 10% on the downside, and what we see here that is between November 16th and 2024 SEPMIBA, that price sort of fluctuates in range. So if we were at this point, then this would have been the lowest low level. This got violated somewhere in October. That's so October. And then the support line was tested many times over the next few days. Now, the typical mistake that beginners do while trying to learn about support and resistance is that they tend to get too focused on one particular level. Now, before coming to this aspect, I'll just show you how resistance looks. Now, this is how typical resistance looks. The price has actually probed this region several times, and then it actually moves down. In the previous chart, price actually probed this region many times, and the price actually moved up. So the mistake that traders do is that they tend to get too focused on one particular level. Hypothetically, let's assume that this is 2000, so traders tend to get into a habit of saying that 2000 is the resistance level. Now, what I want to show you is that resistance or support, it actually always functions as a range and not as a particular level. And if you try to look at charts from now on with respect to range that is range as support and range as resistance, then I think your trading would definitely improve going ahead in terms of quick decision making. Now, I'm just making my point clear here. So see, this is a low formed in August 2024. Then this low got breached in August 2024, and then price sort of fluctuated here. So you cannot say that this level of 2000 is the support here. The reason being that maximum amount of price rotation or fluctuation has happened in this range, which is why the range between 2000 and 1900 is actually valid support in this particular chart. Same goes for this segment, that is Jan 2025 and Feb 2025. Again, the same thing has repeated, that price has sort of consolidated in a range, taken proper support. Mind you, in February, this lower low has breached, so obviously it will look as the support level being breached. Or what happens is that, again, if you look at this level as a range, and if you analyze price here, then this will have been a valid support range, and you can sort of manage your trade better based on a well-defined range. Again, this repeats here. We aren't looking for a particular level as support. We're looking for a 5 to 10% range. Only that can be classified as a valid swing trading support. Now, when I discuss positional trading or extremely long-term trading, how you have to determine support and resistance in those particular methods, I'll show you in detail. But for swing trading, in case you're a swing trader or you want to learn this method, get into a habit of identifying support and resistance as a range and not as a particular single level. So same concept applies to resistance. In this particular chart, this range becomes the resistance. For this phase, again, I have identified this box. For this phase, again, we have seen a particular range, so if you see all these 4 segments, that is time segments in the same chart, the range of support or range of resistance actually varies between 5 to 7%, which actually makes sense because in case you've identified, in case you read trading here, and you mark this as resistance. You know what? Based on the volatility of this particular asset itself, this would be a wrong approach because highest high of this point cannot be a valid resistance or a support level until and unless you have a well-defined sort of a volatility-based range. Now this volatility concept I will cover in my future videos. That's it for this part. We will cover Fibonacci in next part. So in case you have any doubt about what I've shown you, do leave a comment below and I'll get back to you as soon as possible. Thanks a lot for watching this video.